If we click on the All Charts page, we see a number of books here on the left, where we group about 1,000 ETFs, which comprise a large proportion of the investable world and all the individual stocks in the S&P 500, both daily and weekly, and also a cryptocurrency book. Every book is logically labeled. For example, the various industry sectors in the US are in the US sectors book. All the ETFs mirroring the various foreign countries' indices are in the countries book, and so on. When we click on each, it opens a PDF file with an initial table of the performance of the various tickers which are included in the book. If we open the US sectors book, as I've just done, the table gives you the performance of each sector in various time frames from 1 week to year to date, and you will immediately be able to see which sector is performing best in the various time frames. On the right, we also have the technical position of the tickers, how far they're trading above or below the key 200-day moving average, and so on. If we move below the tables, we will see a daily and a weekly chart of each individual security in that book. If you are a very long-term investor, you might want to use the weekly chart, where each bar is a week. If you have a slightly shorter time horizon, you might want to use the daily chart, where each bar is a day. If you look at both, and I'm always looking for charts that confirm each other, in the box underneath the name, you will see the price it last closed at, the change on the day, the buy and sell levels, the benchmark speedometer score, and the individual ticker score, which are explained later in this video. Let us now concentrate on the unique features of the chart book, which are the speedometers in the right-hand corner of the page. You have a speedometer for the benchmark, you have a speedometer for the individual symbol, and also you have an oversold or overbought speedometer. The benchmark speedometer, the first one, is just that. It scores an equity benchmark. Each book has a different benchmark, but the only thing that is important is to look at the score of a benchmark and that of the individual security. Why would you want to own something in your portfolio which is trending at a lesser intensity than the benchmark? There might be a reason, but you better know it. To me, owning a particular sector of the market only makes sense if it is performing better than the overall benchmark. In this case, the US Telecom ETF is performing better than its equity benchmark, and it is something you should be considering owning in your portfolio. It might make sense to own something which performs worse than the benchmark at the moment, but then you will want to consider the reasons carefully and have a valid explanation for it. If the speedometer for an individual ticker is very high, it indicates a strong uptrend and an instrument you want to own, as the price is likely to continue rising and vice versa. A strong negative trend will be reflected in a low score. These are instruments you want to avoid, as the price is likely to continue falling. The way I use the speedometer is to set a score of 0 as my indicator when I should exit long-term position. If a score falls to 0, it means that the trend is more than likely over, and there is at no point in having dead money invested. The final speedometer is the overbought oversold indicator. When a market is overbought, it will go into the red, indicating there is a high probability of a technical correction back down in price in the periods ahead, and that you should hold off buying it till a better opportunity comes along. If it is in the green, it indicates that the price is likely to recover, and that if you're looking to buy the sticker, now is probably a good opportunity. When someone suggests you should add something to your portfolio, or when you're about to see a wealth advisor or discuss your portfolio with him, it is ideal for you to have all these facts and scores at your fingertips. Rather than just accepting what brokers say, you can double check the information and as a result ask pertinent questions about their advice. The buy and sell levels, which are here in green and in maroon, and here in letters, in numbers, are calculated by powerful algorithms and are there to give you the ideal price to buy or sell that security. They are there to save you money. Most investors place market orders, meaning they buy or sell at the best price on the open, for example. These buy and sell levels calculate the highest probability levels where the price is the most likely to find support or resistance on any given period, and the highest risk-reward price to put your money to work or to exit a position. If you're looking to buy a security, it indicates where you should place your limit order and wait for the market to come to you. Those levels have saved me incredible amounts of money over the years, and I hope they will do the same for you. Finally, if you want to download the past scores for any symbol and see how well they have predicted past trends by overlaying them with price in your own charts, you can do so here. All you have to do, for example, type in the code for Amazon, download say 100 periods of the daily, press here, and the score will be downloaded for you in .csv format. You can open that score and a file will open showing you the exact scores for Amazon for the past 100 periods as you requested. And here we are. Here is the score for each individual date and the price of the security.